Most people think income investing comes at the cost of growth. That belief exists because traditional financial advice has conditioned investors to think their best option is to only own a basket of ETFs and eventually sell down those shares to fund their lifestyle. But after watching this, I think you're going to think differently about how wealth can be managed once your net worth crosses into high net worth territory, and why most financial advice is going to start to feel incomplete at that level. So in today's video, I'm going to walk through how we build evergreen income portfolios to generate growing income over time to potentially fund your retirement indefinitely without having you sell stock even if the market's going down, which is generally not a great idea. So if you have between 2 and 25 million and your plan still looks like maxing out retirement accounts, buying index funds, and rebalancing once a year, you probably don't have a complete strategy. If this is a plan that your advisor has you on, you are likely being managed for simplicity because that playbook is designed to reduce mistakes and it scales easily for the advisor. It's not designed to produce durable cash flow to outlast you while leaving the principal alone, which is actually how a lot of investors would prefer to set up their portfolio. But most advisors don't change their basic framework. They just apply the same approach to larger and larger portfolios as your net worth grows. But there's a different way to think about this, and it starts with treating your portfolio like an income system, not just a collection of accounts. Now, an evergreen income strategy is not a low-yielding bond ladder. It's not a pile of rental properties that are going to require your time and effort. It's a portfolio designed to generate income today, grow that income over time, and reduce reliance on selling shares of your nest egg just to fund your lifestyle. That's the shift. Instead of building a portfolio that just fluctuates on a statement, you're going to be building an income engine that's designed to pay you regardless of what the stock market is doing. Okay, so how do you go about doing that? Well, it's actually pretty simple. We're just going to combine two income engines. The first engine is private income. That's going to be your baseline cash flow engine today. It's a portfolio of diversified private funds that are going to include defensive strategies like real estate debt and other income-oriented private investments. The objective is to generate a baseline level of cash flow that comes in monthly that stems from contractual income streams. So once again, defensive in nature. It's meant to set up the foundation. Now, the second engine is dividend growth. That is your growth vehicle over time. This is where you own durable, publicly traded businesses with strong free cash flow that have a track record of increasing their dividends. This is a portfolio of around 30 public companies, most of which you've heard of before, which are going to include some of the best business models ever created that generate high recurring cash flow per share, which should lead to growing dividend payments. So then when you combine those two engines, the result is a dynamic portfolio that's going to start with meaningful income today with the potential to substantially increase that income over time, which is why we believe it's a far superior way to fund your retirement versus relying on selling stock whether or not the market is up or down. And that's why this framework resonates with a lot of affluent investors and especially entrepreneurs who built their businesses the exact same way, by investing for cash flow that grows over time. It really solves a problem that most traditional portfolios don't focus on. Not just how do I grow wealth, but how do I structure my wealth to accomplish our family's goals? Because ultimately, all investments need to deliver you income. You make investments because eventually you want to get far more cash out of that investment than what you put in. This income approach just focuses on delivering that cash flow from the beginning. So how can you restructure your portfolio with this strategy in mind? First, stop thinking about your entire portfolio as one pool of capital with one job. It doesn't all need to do the same thing. Some capital can be structured for income today, some can be focused on growing that income over time. And of course, if you want other diversification strategies in your portfolio, that's totally fine. But the larger point is that every investment should have a specific task to accomplish your family's financial goals. And that's a key difference in how we approach portfolio construction, because this is not about replacing public markets or going all in on private investments. It's about trying to compound income just like you would a business so your portfolio can do more than just appreciate and be sold down later. Because we want to achieve more from our portfolios than what the 4% rule can provide. Once you start thinking this way, your investment decisions are going to change. You're going to want to rely less on any single asset class to do everything for you. You probably won't want to be solely dependent on concentrated technology stocks for your future wealth. And you'll probably want to eliminate the idea of selling principal down just to fund your retirement, and instead leave that for your children or your favorite charities. Because otherwise, what is the point of continuing to build wealth? Traditional planning assumes you're you're going to build this portfolio and you're going to be okay selling small pieces of it each month to pay your bills, whereas an evergreen income portfolio is designed with a completely different objective. The idea is to live off large and growing income streams from our portfolio. And this doesn't have to be complicated, but you can't just throw any high-yielding assets into your portfolio and call it a day. It's all about how you design the system and ensuring you only put high-quality assets in your portfolio. We want income today from private markets, invested alongside institutional quality managers, and then income growth over time from the highest quality dividend growth companies. This portfolio is structured around cash flow distributions, not withdrawals. Because once again, the goal is not to just reach a certain net worth and then spend it down. It's to structure a portfolio that can support your lifestyle and your family's lifestyle long after you're gone without selling assets. Because if you get this income system right, you can worry a lot less about market downturns, how much stock you should sell per year, or how long you're going to need to make your nest egg last. And so that's why we think evergreen income is a worthy goal. And it's why we're laser focused on this cash flow investment strategy. Not because it's more sophisticated, it's actually pretty simple versus most strategies. We just want to invest in high quality assets that compound income, collect those distributions, and don't sell. It's a strategy designed to encourage the right investor behavior to stay invested through up and down markets, because you're not going to want to lose those monthly income payments. You're going to want to stay invested and keep collecting that income because you're going to feel like a business owner. So instead of feeling like a speculator in the stock market, you're going to feel like a business owner collecting distributions from your collection of businesses. And so if that sounds like a framework suited for you and you want to explore how you could apply an evergreen income strategy to your own portfolio, you can book a call with our team below. We'll walk you through the framework and how it may fit depending on your situation. All right, thanks for watching.